Hey everyone, welcome to another episode of AdMail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everybody, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of AdMail. On today's podcast, we are going to be focusing on the Corporate Transparency Act, the biggest piece of legislation to impact reporting of private entities in the last 50, 60 years. So this is monumental, and I want to do a whole AdMail podcast on it. And I will do several more in the next year because the Corporate Transparency Act is going to impact 35 million or so entities that have to start reporting to FinCEN about who their beneficial owners are. So I'm just going to start with that and kind of go into the three questions, because these three questions I got from random clients over the last couple of weeks, and I just want to share them. So the first question is from Chris M. in Rockville, Maryland. Chris wants to know, I have a self-directed IRA LLC from 2020. Do I need to file a report with FINRA in 2024? So the answer is yeah. Every entity that has been either set up in 24 or set up prior to January 1, 24 must file a beneficial ownership interest form with FinCEN by December 31, 2024. So if you have an entity set up before 2024, you need to file a BOI report by December 31, 24. If you set up a new entity in 24, you got 30 days to essentially comply with the BOI requirements. What's the BOI requirement? Basically, you need to show who owns more than 25% of a company and or who has control or significant authority over that entity. Basically, are you the CEO, CFO, manager? Even if you own less than 25%, you have to disclose the name to FinCEN. And that's why the IRA LLC owner generally is the manager of the LLC, and that will require the individual's name to be provided to FinCEN. If it's a regular self-directed IRA or regular solo K, which we'll get to in a second, those requirements are not applicable. In addition, if the company has more than 20 employees and $5 million of revenue, there's also an exemption as well as tax exempts. So great question, Chris. And yeah, it's gonna be a bumpy road for the next couple of years because the rocket ship's taken off January 1, and most people don't know what to do about it. Second question is from Steve C. of Reston, Virginia. And Steve wants to know, I have a solo K with you. Do I need to file the beneficial ownership interest report? The answer, no, Steve. 401ks, just like direct IRAs, are exempt, just like charities. The only reason in the first question, the question was about a self-directed IRA LLC. So if it was just a self-directed IRA, then no, there'd be no BOI report due, just like a 401k, which is a tax-exempt trust. If a 401k used an LLC, then there would be a requirement to file the BOI report within 30 days of establishment of that LLC, or by December 31, 2024, for any entity set up before January 1, 24. So short answer to your question, Steve, but that's it. That's good news. Third and final question of the podcast from Teddy W. of Dublin, Ohio. Teddy wants to know, I don't understand. If my IRA owns an LLC, why do I need to file a report with FINRA under the Corporate Transparency Act? So Teddy, you and Chris think alike. The reason is, you would think that because the IRA is tax exempt, the IRA shouldn't have to file a beneficial ownership interest report with the government, with FinCEN, right? Makes sense. Why would they have to do that if it's a tax exempt? Tax exempt are exempt from filing BOI reports. The problem with the Corporate Transparency Act is it doesn't just ask for ownership, it asks for who has substantial control. And the manager of an LLC is a person. So any person that has substantial control, even if they own less than 25%, in this case, the IRA owner owns zero, right? The IRA owns the majority interest in that LLC, for example. But because the individual has substantial control over the LLC, it makes decisions. He or she is the manager, decides all the important decision making for that LLC, they have to comply with the Corporate Transparency Act and file the BOI with FinCEN. Now, the good news is if you're a client of IRA Financial, we are going to do this for you. We're going to have a team of specialists that will acquire a FinCEN number, and we will report this for you within 30 days of formation. And also, if there's a change, we will file with FinCEN within 30 days. For all our existing self-directed IRA clients, we will be in touch with you in 24 and working very closely to make sure this filing requirement gets done for all our self-directed IRA LLC clients that are part of our compliance program. So that's it for today's podcast. The Corporate Transparency Act is a it's a rocket ship. That's we all need to kind of understand how its trajectory is heading, because it can come smashing down on us. There's actual fines of up to 10K and jail time. Yeah, jail time of up to 2 years for failure to comply. This is an act that's a direct, really attack on money laundering and terrorism, and the intentions are good. Is the government overstepping their authority? It seems that way, right? If the IRS wants to audit someone, they can just audit ownership of an LLC. But here they're basically forcing everyone to comply, assuming you're not a tax exempt and you're a smaller business or a holding company with less than 20 employees and less than 5 million in revenue. You got to comply. They expect approximately 35 million entities to be subject to the Corporate Transparency Act and required to file a BOI. They expect about 4 to 5 million new entities a year will be subject to the BOI requirements via FinCEN. So this is a game changer. This is the biggest change in our reporting techniques, our reporting procedures for LLCs, corporations. And that this doesn't just apply to LLCs, right? It applies to corps. Any for-profit entity with less than 20 employees and 5 million in revenue, including entities where a person has less than 25% ownership, but if they have substantial control over the entity through management or president or executive position, they still will need to comply, and their name will need to be provided to FinCEN, as well as their address and social. So very, very, very monumental legislation that's going to impact 30-something million of us, and it'll definitely give the government more data. What they do with it, well, that's up to them. As far as I'm aware, they have like less than 500 employees that are going to be responsible for this. Not sure what they're going to do with 35 million names and information, but hey, with AI and computers, they probably can figure it out. So much more to be discussed on this, but it's all about being aware of these new rules, because there's high penalties and even jail time for failure to comply. That's it. Adam Bergman here, IRA Financial. Thanks for listening. If you're watching on YouTube, appreciate that. It's a weekly podcast that drops every Thursday. It's a lot of fun. Get to learn from quite very interesting questions from just smart people, clients or non-clients of IRA Financial. There's a lot of smart people with a lot of great questions on self-directed retirement accounts. If you have one, you can leave it below. You can leave it in the comment section. You can email us at info@IRA Financial. You can hit us up on social media, and the questions will come to me. They always do. They find me, and just enjoy going through them. And I prepare with them. And if I don't know the answer, which happens, yeah, sometimes I don't know all the answers, I definitely reach out to some colleagues, some tax lawyers, CPAs, risk attorneys that I work with and are friends with, that we kind of mull these questions over. So thanks again. Appreciate everyone's cooperation, participation, and thanks for wanting to learn. Have a great day, and see everyone again next week. Take care.